The conversation surrounding the approval of Ether exchange-traded funds, ETFs, by the U.S. Securities and Exchange Commission, SEC, has garnered significant attention. Amidst rising anticipation, recent developments suggest a potential setback for proponents eagerly awaiting green lights for these innovative financial products. Bloomberg's ETF analyst Eric Balchunas, drawing from his extensive experience and industry insights, has recently adjusted the probability of an Ether ETF's approval by May to a mere 35%. This recalibration of expectations raises crucial questions about the underlying factors influencing the SEC's stance and the broader implications for the cryptocurrency market. At the heart of the dwindling optimism is a conspicuous silence from the SEC towards ETF issuers, a departure from the expected regulatory dialogue essential for addressing potential issues and refining proposals. With a crucial deadline looming, the absence of communication is perceived as a negative omen. The main thing is the fact that we're 73 days from the final deadline and there's been no contact or comments from the SEC to the issuers. That's not a good sign, Balchunas commented. This procedural stalemate not only hampers progress, but also hints at a deliberate reticence from the regulatory body, possibly aiming to temper expectations and manage the pacing of ETF approvals. Further complicating the path to approval is SEC Chair Gary Gensler's nuanced position on Ether. Gensler's view of Ether as a security rather than a commodity akin to Bitcoin introduces a layer of regulatory complexity and hesitance. This stance, coupled with the desire to avoid repeating the political and legal challenges encountered with spot Bitcoin ETFs, suggests a cautious approach from the SEC. Balchunas' analysis sheds light on these dynamics, suggesting that Gensler's past experiences and regulatory philosophy are shaping the Commission's current approach to Ether ETFs. The potential denial of Ether ETFs does not unilaterally spell doom for the cryptocurrency's prospects. Some industry observers, like Matt Korva, general counsel at Consensus, argue that a denial could, paradoxically, pave the way for a more open and less contentious regulatory landscape for cryptocurrencies in the long term. This perspective underscores the complex interplay between regulatory actions, market responses, and the strategic positioning of various stakeholders within the cryptocurrency ecosystem. Despite the current uncertainties, the dialogue between industry representatives and the SEC, such as the recent meetings between Coinbase, Grayscale, and SEC officials, underscores the ongoing efforts to bridge regulatory gaps and align on the prerequisites for ETF approvals. These discussions, focusing on analytical aspects like the correlation between ETH and BTC prices, indicate that while challenges persist, the conversation is far from over. Amidst the regulatory and strategic maneuvering, Ethereum's market performance remains a critical backdrop to these discussions. With a current trading volume of 30,550,596,301 ETH and a significant increase in market activity, Ethereum continues to command attention. The cryptocurrency's resilience and growth, evidenced by its recovery to a price of $4,090 and a market capitalization of $481,540 and $289,444, reflect its central role in the digital asset space and the high stakes involved in regulatory decisions. As the deadline for Ether ETF approvals approaches, the cryptocurrency community remains in a state of eager anticipation and cautious optimism. The complexities of regulatory approval, combined with the strategic considerations of the SEC and the intrinsic challenges of categorizing digital assets, frame a narrative of ongoing negotiation and adaptation. While the immediate future of Ether ETFs may be uncertain, the evolving dialogue between regulators, industry leaders, and the broader cryptocurrency market signals a continued commitment to navigating the intricacies of digital asset regulation and innovation.